You're about to hear something that could change how you trade forever. Mark Douglas spent 17 years studying the markets, the behaviors of traders, and the psychology behind why 90% of them never make it. Not their strategies, not their indicators, not their systems. It's not about the tools. They're irrelevant if your mind isn't aligned with the market. The truth? Your psychology is the single most significant determinant of your results. Picture this: a chart filled with sharp spikes, red candles slicing downward, green candles shooting upward, all in chaotic motion. That's most traders' lives: emotional, reactive, unpredictable. Now imagine a smooth, green curve climbing steadily, consistently, without panic, without fear. That's the power of mindset, the edge Mark Douglas uncovered. It's the difference between a trader who gets crushed by losses and one who survives, grows, and thrives. Douglas wasn't born with this wisdom. He was a struggling trader like most of us. He chased strategies, indicators, and hot tips. He made money sometimes, but he lost it just as fast. Only when he examined his beliefs, emotions, fear, and greed did the market reveal its secret. Predictability isn't in the charts, it's in you. By the end of this video, you'll understand the principles that separate consistent traders from the 90% who fail. You'll learn why psychology outweighs strategy, how to think in probabilities, define risk, and follow a disciplined framework, and how your beliefs, sometimes unconscious, drive your results more than any indicator ever could. And here's the most important promise. If you pay attention and internalize these lessons, the next time the market tests you, the chaos won't shake you. You'll trade from a place of clarity, confidence, and process. So let's dive in, because understanding Mark Douglas' psychology framework isn't just reading a book or watching a video. It's stepping into the mindset of every trader who thrives when the market doesn't care about them. Here's a principle that will change everything. Trading success is 80% psychology and 20% strategy. Think about that for a moment. Most traders obsess over setups, indicators, news, and patterns. However, Douglas discovered that even the most perfect system will fail if the trader executing it doesn't have the right mindset. Imagine two traders. Both have the same signals, entry and exit points, and strategy. One ends the month in profit. The other wipes out his account. Why? It's not luck. It's a mindset. One trader reacts to fear, hesitates on entries, cuts winners short, lets losses spiral. The other trusts the system, accepts uncertainty, and remains disciplined even when the market moves against him. Their strategies are identical. Their results? Worlds apart. Douglas taught that the market is neutral. It doesn't care about your hopes, fears, or dreams. It reacts to price and probability, nothing else. Yet most traders allow emotions to decide their trades. Panic at a minor drawdown, overconfidence after a winning streak, hesitation during volatility. Most traders fail because they're emotionally in the trade before entering. Here's the harsh truth. The market doesn't owe you anything. It doesn't owe you a win. Your psychology is the only thing between you and consistent results. If your mind reacts emotionally to every spike, every loss, you will never reach your potential, no matter how perfect your system is. Douglas showed that mastering the mind, detaching from individual outcomes, thinking in probabilities, following a disciplined framework, is the true edge in trading. To internalize this, you need to separate yourself from the scoreboard. Don't obsess over one trade or one day. Focus on your process. Focus on executing your plan perfectly, trade after trade. The profits will follow, not because the market is kind, but because your mind is disciplined. Understanding this 80-20 principle is the first step to leaving 90% of failing traders behind. It's not a strategy. It's you. Douglas condensed all his wisdom into 5 fundamental truths. They're simple, but if you ignore them, you'll continue to trade like the 90% who fail. Truth number 1: anything can happen. Certainty is an illusion. The market can spike, crash, or stagnate without warning. Accept unpredictability. If you cling to expectations, you'll fight the market instead of trading with it. Truth number 2: you don't need to know what will happen next to make money. This is the core of probability-based thinking. You don't have to predict the next candle, news event, or market swing. You need an edge and the discipline to apply it consistently. Think like a casino owner, not a gambler. The casino doesn't care about the next hand. It wins over thousands of plays because probability favors it. Truth number 3: wins and losses are randomly distributed. A loss is not a failure. A win is not a guarantee. Just because you lost 5 trades in a row doesn't mean the market is against you. Just because you won 3 doesn't mean you're a genius. Randomness rules short-term outcomes. Overreacting to it destroys consistency. Truth number 4. Your edge is just a probability, never a guarantee. Every system, every strategy, every indicator works because it offers a higher likelihood of success, not certainty. Accepting this frees you from emotional attachment to outcomes. You stop gambling, you start trading. Truth number 5. Every market moment is unique. No 2 trades are alike. Every candle, every spike, every tick carries its own context. Treat each trade independently. Don't try to force yesterday's patterns onto today's market. Presence and attention to the current moment separate disciplined traders from emotional ones. When you accept these truths, something incredible happens. Fear and hesitation diminish. You stop chasing streaks, you stop avoiding losses, and you begin to operate from clarity instead of emotion. You see your trades as probabilities, not certainties, and your results reflect your discipline, not your luck. Now, let's talk about the process. Douglas didn't just identify truths, he built a framework to live them. Step 1. Predefine your risk. Every trade begins with knowing your maximum acceptable loss. You can't control the market, but you can control your exposure. Step 2. Follow your plan, not your emotions. Rules exist to protect you from yourself. They remove the guesswork, the panic, the second guessing. Step 3. Review trades based on execution, not outcomes. Did you enter correctly? Did you exit at the right time according to your plan? Profit or loss is irrelevant when assessing a process. A disciplined trader focuses on doing the right thing every time, knowing that profits will accumulate over a series of trades, not a single decision. Here's a case. Trader A follows rules. A losing trade occurs, but he exits exactly at his predefined stop, journals the experience, and moves on. Trader B overrides the plan, hopes for a rebound, and doubles down. The result? Trader A remains in the game. Trader B suffers emotional damage and financial loss. This is the power of process over outcome. Douglas taught that discipline isn't a restriction, it's freedom. Freedom from fear. Freedom from impulsive decisions. Freedom to trade with confidence, knowing that your mind is aligned with probability, not emotion. Most traders treat every trade like a make-or-break moment. One loss and panic sets in. One win and overconfidence inflates their risk. Mark Douglas showed a radically different approach. Think in probabilities. Here's the truth. You don't need to know what will happen next to make money. You only need to know that your system has an edge, and that edge works over a series of trades, not a single trade. Think of a coin toss. You can't predict if it will land heads or tails, but over 100 flips, you know the probability is roughly 50/50ths. Imagine your trading edge as a slightly biased coin, maybe 5% chance of success. One flip doesn't prove anything. 5 flips don't prove anything. But over 100 flips, your probability asserts itself. Douglas often compared this to a casino owner versus a gambler. The gambler obsesses over the next trade, trying to predict outcomes, letting emotions dictate behavior. The casino owner doesn't care about any single hand. The owner focuses on probabilities over thousands of plays. That's how the house always wins. The same principle applies to trading. Detach from individual results and focus on executing the process consistently. Emotional detachment is essential. You must train your mind to treat each trade as one of many. A loss isn't personal. A win isn't proof of genius. You're not trying to beat the market today. You're letting probability and process work in your favor over time. Here's an exercise. The next time you enter a trade, visualize it as 1 in 100. Imagine watching it unfold without judgment, fear, or hope. Focus only on whether you're executing your plan correctly. Over time, this mindset rewires your reactions, reduces anxiety, and builds a consistent approach that outperforms emotional, outcome-focused traders. The most dangerous misconception in trading is believing you can control outcomes. You cannot. You can only control your actions. When you embrace probability-based thinking, the market stops being a personal battle and becomes a structured environment where your discipline converts risk into opportunity. Douglas distilled the behavior of consistent traders into 7 actionable principles. These are not abstract ideas. They are behaviors that separate the 10% who succeed from the 90% who fail. 1. Define risk before entry. Never enter a trade without knowing your maximum loss. This eliminates panic and second guessing. 2. Accept losses quickly. The market is indifferent to your emotions. Cutting losses swiftly preserves capital and mental energy. 3. Take profits systematically. Greed is a trader's silent killer. A plan exists, and you shouldn't deviate based on emotion. 4. Focus on execution, not outcome. Review trades based on whether you followed your plan, not on whether you won or lost. 5. Pay yourself as the market allows. Capture gains when available, and don't assume the market owes you more. 6. Monitor errors and emotions. Keep a trading journal. Track your wins, losses, and emotional triggers. Awareness is the first step toward mastery. 7. Understand the necessity of discipline. Discipline is not a restriction. It is your identity as a consistent trader. It separates professionals from amateurs. When these principles are applied, your trading transforms. You stop reacting emotionally. You start anticipating and managing risk. You trade within a structure that consistently converts probability into results. The beauty of Douglas' framework is that it's universal. These principles apply no matter your market, time frame, or strategy. They create an internal environment where success is inevitable, not because of luck, but because your psychology aligns with the probabilistic nature of the markets. Douglas introduced the concept of the zone. This is the mental state every profitable trader strives for: emotional neutrality, total focus, and freedom from fear or greed. When you're in the zone, you trade with clarity. You follow your process without hesitation. You accept losses and gains alike with equanimity. Achieving this state isn't mystical, it's practical. Start with routines, pre-trade checklists, mental resets, and structured reviews. Train your mind to detach from individual outcomes. Visualize trades, rehearse reactions to losses, and cultivate a calm, process-oriented mindset. Professionals enter the zone consistently because they prepare mentally as much as they prepare technically. Amateurs, by contrast, rely on emotion, which guarantees inconsistent results. The zone is not about eliminating risk, but embracing it without fear. You acknowledge uncertainty, accept the randomness of the market, and focus on executing your edge. Every trade becomes a small experiment, free from ego. This state doesn't happen once. It develops over time, through disciplined practice, awareness, and repetition. Visualize yourself as a calm observer, watching price movements as they unfold. Your mind isn't pulled by greed or fear. You're present, engaged, and in control. Every decision aligns with probability and process, and every outcome becomes a data point for improvement. Even the most disciplined traders face traps. Douglas identified the four most common: revenge trading, overtrading, moving stops, and taking profits early. Revenge trading occurs when a loss triggers emotional retaliation. The solution? Step back. Wait. Review your plan before entering another trade. Overtrading is driven by boredom, frustration, or chasing profits. The solution? Define your risk and trade only when your system signals an edge. Moving stops violates predefined risk and is a product of fear. The solution? Lock in your stops before entry and treat them as sacred. Taking profits early is motivated by greed or fear of losing gains. The solution? Follow your plan systematically and trust probability over emotion. Douglas' overarching lesson: all consistent trading results are psychological. Master your mind first, and the market rewards you second. Accept uncertainty, think in probabilities, build discipline, and avoid the traps. When your psychology aligns with process and probability, trading stops being stressful and starts being systematic. Everything you've learned in this video boils down to one principle: your mind is your edge. Strategies, charts, indicators, they're tools. Your psychology determines whether they help or hurt you. Master your mind first, and the market follows. Now I want to hear from you. Which of Douglas' truths challenges you the most? Is it accepting randomness, thinking in probabilities, or staying disciplined through losses? Comment below. I read every response and reply personally. If you want more deep dive, principle-driven trading psychology breakdowns, subscribe and turn on notifications. In the following video, I'll reveal the most damaging trading belief and how to break it so you can remove invisible limits and trade at your highest potential. Remember, the market doesn't owe you consistency, but your mind, when disciplined, does.